Hello, and welcome to the latest edition in EPRA's Mythbuster podcast series. Today we're exploring the role of active management in listed real estate, whether this active management creates better returns and outcomes for investors, and indeed how to successfully undertake it. Joining us are Olivier Hertoge, Damien Marichal, Vincent Bruyère and Pauli from Degroof Petercam Asset Management, or DPAM as they're better known. DPAM is well known for its huge experience and successful track record in European listed real estate. Welcome. Great to have all four of you with us.
DPAM manages about 50 billion euros in gross assets under management. In real estate equities, we manage about 1.2 billion euros. We focus solely on European and Eurozone listed real estate.
We apply two types of active management strategies for our property funds at DPAM. Both are fundamental bottom-up strategies. The first type of strategy is a benchmark strategy, whereby we look at the constituents of the benchmark and decide whether we want to overweight, equal weight or underweight versus the benchmark, based on our expectations for the stock price performance of each company. In addition, we can add out-of-benchmark positions. The second type of strategy is a non-benchmarked strategy, whereby we express our investment convictions without looking at the benchmark. The performance of the fund is measured against the benchmark, though. Whatever the investment strategy of our funds, the goal remains the same: to provide clients with a higher return and at the same time lower volatility than that of the benchmark.
In active management, having a trusted benchmark, such as the FTSE EPRA Nareit Developed Europe Index, is crucial. It's crucial both internally and externally. Internally, a trusted benchmark is crucial to be able to gauge correctly the fund's performance versus that of the broader universe. An index should appropriately represent the relevant investment universe. For example, data centers are now identified by EPRA and its indexed partners as a separate subsector within real estate, next to more traditional subsectors such as offices and retail. Externally, a trusted benchmark is equally crucial for clients to have confidence in the fund's reported outperformance. Being an active investor provides you with the flexibility to invest in promising businesses that are not yet or only marginally included in the benchmark. Thanks to our comprehensive understanding of the European listed real estate market, we can provide feedback to small cap companies about how they can improve their corporate governance and their reporting. We provide this feedback not just through proxy voting, but also during direct engagement. Ultimately, improved corporate governance and improved reporting should allow small caps to attract a broader investor base and thus lower the cost of capital, which in turn should allow them to grow stronger.
Being an active manager is a daily challenge. Beating the benchmark demands constant attention and agility, but also a firm belief in your convictions and expertise. In such volatile times, a well-executed active management strategy offers investors more downside protection than passive management strategies. We don't invest in a company just because it's included in the index. We study the fundamentals. We ask ourselves, is the portfolio well positioned? Are the rents growing? Is the management team credible? We invest with a forward-looking mindset or forward-looking approach helps us identify tomorrow's winners.
In listed real estate, especially in Europe, there is a real opportunity for active management. Many REITs are still under-researched. That gives us an edge. With our strong expertise and proven track record, we believe we can continue to find value that others might miss, and as such, deliver better risk-return outcomes for our investors.
It's clear that active management is not just about stock picking. It's about shaping better businesses and delivering sustainable value. Thanks everyone for watching, and join us again for the next edition of EPRA's Mythbuster series.